Hey everyone, I found one growth stock that's down 56% off its high that I think makes an excellent purchase right now. So I'll share with you what the video is and several of its financial characteristics that make me recommend this stock as a buy. So let's jump right into it. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the stock that I'm talking about here is South Korean e-commerce company Coupang. It's down 55.5 or 56% off its high, and I think it makes an excellent investment right now. So I'll go through several of the reasons why I think that's the case. Notably, you might think the slowdown in revenue growth from Coupang has been a bad thing, but I tend to like management that focuses on profitable growth, especially companies making that switch from going after growth at all cost and then switching to the more profitable growth mindset and demonstrating that they can achieve that transition, which Coupang has done. I tend to like those companies. I tend to like them. And Coupang is another one of those that, following the rapid shift in consumer behavior coming out of the pandemic and the rapid increase in borrowing cost or the costs of capital, many companies like Coupang have had to make this switch. And not all of them have been successful. And so those that have demonstrated the successful pivot, I tend to like them because not only is the company now more profitable, but it demonstrates that they can execute on these strategic shifts. So it demonstrates a management capability and it demonstrates a management team that can take the business in different directions and adapt when needed. And that's a skill that I value personally. So revenue has still grown, although it's not growing at the rapid rates of 2 years ago. It's still growing. Trailing 12-month revenue, you can see 24 billion. That's up from roughly 12 billion in the 12-month period ending January of 2021. Just like I was discussing the operating profit margin, look how it shifted from going in the wrong direction. January in 2022, I would not be recommending this stock. Look at the direction it was going. The operating profit margin was heading in the wrong direction. And at this point in time, I did not have the stock rated as a buy because it was going in the wrong direction. It's easy to make more sales if you're willing to take more losses on the bottom line. And that's where Coupang was headed, and no demonstration that it was moving at least in the right direction. I don't mind companies that are losing money on the bottom line, but they're heading in the right direction. What I don't like is companies that are losing money on the bottom line and heading in the wrong direction, which is where Coupang was going all the way up until January of 2022 before that strategic shift. Also, I don't immediately give companies credit when they make that one move forward for 1 or 2 quarters. I like to wait to see more development of that trend, which we can now clearly see, right? We saw the turnaround start in January of 2022, and we've seen continued progress on that path. It's been over a year and a half now, more than 2 years now. It's demonstrated progress on the front, and I can feel comfortable that they can sustain this shifted business model. Now, while operating profit margin is still only 1.94%, it's likely to head higher. And then if you look at cash flow from operations to sales, which is a similar metric, although it strips out some non-cash expense, and for a company like Coupang, which has significant shares of non-cash expense like depreciation and amortization, its cash flow from operations to sales is nearly 10 times better at 10.88%, and we see the similar trend in this metric here, moving upward in the right direction significantly and then sustaining that improvement for the longer term. Now, if you look at Wall Street, the analysts on Wall Street tend to agree with my assessment that the company's improved profitability will continue over the next 5 years. The analysts on Wall Street that are following Coupang stock, they think it's going to increase earnings per share by 91% over the next 5 years. That's a phenomenal growth rate in EPS over the next 5 years. Now, even if the company doesn't hit this robust target, even if they approach this level, I think it'll be a good investment for investors. I think even if they hit half of this level, if they grow earnings per share by 45% over the next 5 years, I think it'll be a good investment for investors at current valuations. At its current price, even a growth rate of 45% in EPS is a good value, and I'll share with you a little more on why I think that's the case. Now, the balance sheet is also solid. The company has $5.24 billion in cash and short-term investments and only $1 billion in long-term debt. That means if it so chooses, it can pay off all of its long-term debt and it'll still have $4.2 billion left over. So that means it's a strong balance sheet. A strong balance sheet helps companies both for growth and to weather downturns. For growth, one way companies use cash for growth is by offering customers a generous accounts receivable term, right? You make a deal with the customer and you say, I'll sell you this product, and instead of having to pay me in 30 days, I'll give you 90 days to pay me back. That more favorable term gives customers more reason to buy from you versus your competitor who may not be able to offer that because they need the cash sooner. If you've got a balance sheet with 5 billion, you're not desperate for cash. You can give more favorable terms to your customers and thereby generate more sales. So that's one way that having a robust balance sheet helps a company grow sales because it can offer better terms to its clients. It's not desperate for cash. It doesn't need to demand payment up front in order to make a sale. It can offer favorable terms. It can offer more flexible terms. It can enter into more flexible agreements because it has that cash. It doesn't need to be constrained in terms of the types of business relationships it enters. It can be more flexible, and that's always a positive for growth. And finally, the stock is relatively cheap, trading at a forward price to earnings of 34.99. It's near the lowest it has traded for the last 2 years, according to this metric. You'd see at 34.99, it's been lower, right? It was lower around January of 2024, but still it's near the lower end of where it's been going all the way back to January of 2022. Of course, the company is not growing at the rates it was growing at on the top line, but it has improved significantly on the bottom line. It's generating more profit, and its expectations for profit over the next 5 years are robust. And even for the next 10 or 20 years, I think expectations are robust. E-commerce or online sales are just so much more convenient than brick and mortar. I think as economies evolve, more and more percentage of sales are going to come from online retailers. Right now, worldwide, including in South Korea, there's still a significant amount of sales that are happening in person. I think more and more that's going to move online. It's just so much more convenient. That's the direction I think that industry will head towards worldwide for the next 5, 10, 20, 30 years. Now, I'm not saying 100% of sales will be online. There are certain things that will always be better to buy in person. For instance, shoes, right? Or certain kinds of clothing that you want to try on. You don't want to order and then send back and order and send back. But for the most part, the majority of things, it's going to be more convenient to buy online, and that's going to be a tailwind for Coupang longer term. So for all these reasons, I think Coupang is one growth stock that's down significantly that makes an excellent investment for long-term investors today. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.